So, since I started trading options, I originally had about $6,000, and as of today, I have $8,100. Hey everyone, welcome back to another video. Today I am doing a portfolio review to show you how much money I've made on my Robinhood account. So, what I like about Robinhood is that it shows you the growth of your whole account, but it also adjusts based on how much you've deposited. So, even let's say back in 2015, I actually only had, I think, $1,500 in this account. It's adjusted it all the way up to 5,300 because in total, that is roughly how much I've deposited over the lifetime of this account. And you can see there's a lot of ups and downs, but it largely stayed the same. Robinhood was always a secondary account for me where I just did some riskier trades, and I'm actually still holding on to my most embarrassing move yet, which was HMNY. And if you don't know what that is the company that owned MoviePass. And as you could see, when I bought it, I thought I was getting a great deal. I think I bought it at around $4 or $5, and it has since dropped to under fractions of a penny. So that was a big loss, and that was a majority of this account. And there's some other things that just wasn't very profitable, as you can see here. It just stayed flat. But if we close the time frame, you can see there's a lot of stuff going on here. And right about here, August 18th or August 12th, actually, this is when I started trading options. So since I started trading options, I originally had about $6,000, and as of today, I have $8,100. And remember, this is all unrealized gains, so there's a lot of positions that are still open. But yes, as of today, I have made this much actual cash in gains, and I've closed a lot of positions out and I've reopened them. But I think this is a fair representation of the growth of my account. This is really amazing. I mean, if it's only been about 40 days since I really started, 45 days, I think, and I've essentially made a 25% return on this original principal. Now, if you extrapolate that to a longer time period, 45 days, maybe 8 45-day periods in a row, this would be a 200% growth in my account if I could keep up this kind of results over the course of the year. But that is very unlikely. There are a couple of key events that happened that helped me make a lot of money, but I also lost a lot of money. So initially when I was options trading, I was just buying calls and puts. And essentially that was kind of like gambling. I had a good trade in the beginning. It was up, down, up, down. And then a series of really bad trades where I lost a bunch of money. I had to sell out. And here, this was an unrealized gain spike. This was post Apple split. Had a call that I bought, and that was the right call. The price shot up, and here my account was worth so much. At a certain point, had I sold my call, which I bought roughly for, let's say, $500, I would have made $3,000, but I got greedy and I wanted to wait for it to, be worth more. It didn't. Apple started to fall. I still sold for a decent amount of profit, but not nearly as much as it was in the peak. At the time, I was beating myself up, but after I sold it, it did start to fall down a lot more. So I don't really think about that as a big loss anymore. I mean, I took profit. So that was a big lesson. Don't feel bad about taking profit because there's no point, and there's like way more losses to come. Here I was literally trying out every single thing under the sun. Iron condors, puts, calls, selling puts, debit spreads, a lot of debit spreads. I thought debit spreads were the key. I loved them for a period of time, but once the market became pretty unpredictable and there wasn't a clear direction, I just started to just lose a lot of money, or every time I would win, I would lose. And those plays took some time to really think about, to select the strike price, to think about the expiration dates. And I was would be at zero after a week's worth, like nothing would happen. So I stopped doing that. And then I just started to sell puts. And this is where stuff started to tick back up. And every loss that you see is probably me either buying another call or doing another debit spread. And it's funny, you would think that stocks generally go up, at least the history of stocks have gone up, and that if you place called debit spreads where you expect these fairly stable stocks to go up, they just don't. The moment you place them, the stock trades under and you lose money. It's really strange, but that's what it feels like. But once you start selling, that's when you realize, like, oh, now I'm making money consistently and I'm winning a lot more than I'm losing, even though I'm not making as much money. That is what's happening. And it's been really good. And there's been big jumps. My second really big jump somewhere here when I bought a Nikola put at some point, and then Nikola finally dropped, and I made a cool $700 off of that. So that was a really big bump. And yeah, that's it. So there's been two big bumps: the Apple calls that I profited off of, and the Nikola put. Those combined have made me $1,800. I've probably lost $1,000 here or there playing all these other random plays. I was just trying to learn, so I was trying everything. And then at the same time, I've probably made a little bit over $1,000 in some of those more random plays, and then especially more consistently profitable after I started selling puts. So that basically accounts for this $2,000-ish gain as of right now. So now if we look through my current plays, you can see that I'm still being pretty risky. I'm selling a put. There's a lot of calls, but I bought a lot of these back when I was more degenerate and I was just kind of gambling basically. So a lot of these are from that period of time, but as you can see, at least the strike prices are really far out. So I learned at some point that I need more time for these to be right, because if I'm just doing weeklies, that really is the most gambling thing I could do, because at the end of the week, I'm either right or wrong. It's either up or down. But if I have more time, it's up to me to decide, oh, maybe I could take some profit now, or I could keep holding it. There's just less random luck. And if I were to believe that the market's going up generally for some of these calls, then at some point it should be up. So that's why these expiration dates are super far out. And yeah, that's it. Let me know how you guys are doing. Please invest in that like button if these videos are helpful. It helps me tremendously. Thank you so much for watching. This is Green Knight Trading, where Squires become knights. I appreciate you, and I'll see you soon.